Welcome to Bears in Exile. Today is June 2nd, and we're going to take a look at the Dow, SPX, VIX, TNA, SLV, GLD, FXE, and UUP. We have all kinds of material to go over tonight, and so I'm going to try my best to get it all in one video, and away we go. We had the big nasty bar. Of course, we're actually not of course. Normally we start off with the Dow. Tonight we're going to start off with the SPX. We had yesterday's nasty sell-off. You can see that the bullish long-term moving averages are taking damage, but are still in formation. Further separation of the short-term moving averages, all pointing down. Possibly getting bubbly. We don't have enough bars yet to see that. I've also changed the channel lines to better reflect what has happened, and very interesting. You know, we have on the lower channel we have 3 soft touches, 1, 2, 3, along with a couple piercings here and here, but 3 soft touches is pretty good. And on the top we have a soft touch and essentially 2 hard touches. So pretty decent channel lines that are established here. They are uniform. I like that. I don't like descending or ascending wedges nearly as much as I like something with parallel lines. That's just me. We ended off the day with a hammer. So we talked yesterday about seeing the move decelerate, and it would appear that that is what's happening. It's not to say that it can't go lower, but we did have one really good thing. I was just ecstatic about this. We hit the 1305 target that was we talked about way back here. That was finally hit today. So I am totally happy with that, and am completely open to the idea of now going up to the 1400s. And now that everyone is bearish and afraid, now they can get the smackdown put on them and get robbed, just like the bulls were robbed yesterday. So our secondaries, they do have room to move down still. I don't think it'll take too much for them to flip back up, but that's because of other things that we are going to talk about very soon. One very interesting thing, I use this as a tool, I love it, which is price consensus. And we had price consensus for March. These are delayed by a month because the data has to build. But for March, the data consensus was right here. And if we trace that across, we see that the price consensus for that month is right here. And it held as a support all through here. Couldn't close below it. It did pierce it, but couldn't close below it. Had the nasty drop and broke through it, but price consensus for April, actually it shifted backward a month. So actually this was February's price consensus that was holding here, and the March consensus is right here. And you'll notice that we closed above that, right at it, but we did pierce it today. So I just find that very interesting, that there is a lot of buying consensus at this level. Now if we break down through the bottom channel, all of that is busted, and so that will not be a correlating factor, but that did pop out at me, and said, oh, look at that, that actually does make sense why it's stopping right here. So very interesting. And on the Dow, same thing, I adjusted the lines. It isn't quite so parallel. 3 soft touches, soft touch, soft touch, hard touch, hard touch, but a good established channel. And also the Dow ended in a hammer, suggesting that we could have a pop up, which if it's true, our speculation that this is a decelerating move makes sense. Of course, it can go down. If it breaks the bottom channel line, all bets are off. We do have further expansion, possibly bubbly. It looks bubbly on the short-term moving averages, and the long-term moving averages are still a bar, and they are still bullish. So, very interesting. Also to note, we did have an uptick on the Dow today, and it is looking like it's looping over. So, this might not work out, but more on that in a few minutes. But we did have an uptick. It gave us a target around 12,330, and so that'll be something to look for. That is on the 60 minutes, so it does have some weight behind it. Secondaries are for the most part low, with the exception of the stochastic, and they are, in the case of the MACD, ticking up. So we shall see if we do get a bounce. Going on to the VIX, here's a very interesting piece. This may be a little bit out there. We ended up the day with a spinning top. I hate spinning tops. It is a candle of indecision, so it can go either way. The bar is still bearish. It is very weak. We do have further crossover on the short-term moving averages. They have not cleared the bar except for one of the short-term moving averages. All the secondaries are pretty high, with the exception of the RSI, which definitely has more room to move to the upside. But something to take into consideration. On the 60-minute of the VIX, here's something that is interesting. Okay, if we are actually going to have that reverse head and shoulders, go up to the 1400s, some people say 1430, some people say 1420. I'm more in the line of 1420, but that's just me. How is that going to happen? Well, here is a possible theory. On the 60-minute, RSI is high, stochastic's right in the middle, and the MACD could cross over. The MACD histogram is ticking down, but we have this. We have possible head and shoulders. Left shoulder, head, right shoulder. And if we measure that out with the, let's say that this is the neckline. Well, you could say it is over here also. So either $15.50 or $16, and the top is $20. It's $4.50 less than the neckline, which gives you a target around about $11. Now we know that we have an all-time low right over here above $14. And way back here we were talking about, hey, if this breaks, it's going to go crazy, and that hasn't changed. If this were to loop down and take out that level right there, new low, there's going to be all kinds of complacency, and as this goes down, the market is going up. Everyone goes into a frenzy, breaks this. Everyone says, hallelujah, we've broken this. Down we go, and there's $11 right there. Absolutely possible. Is it likely? We don't have enough data, but if that head and shoulders is to be believed, then there is a possible way that you could get to 1400s on the S&P. TNA, and there'll be more ideas to go along with that here in a moment. TNA ended up spinning top, hate spinning tops. Moving averages are, long terms are trying to, they're almost at a flip over or a flat line. So, short-term moving averages are expanding and heading down. Secondaries are low or headed down. And it has all kinds of room to move in its channel. Go any which way it wants, and it is much more volatile than the Dow and the S&P. So, not much to glean from TNA. And I'm going to stop the video here before it gets too long, and I will continue in part 2. We're going to be going over the precious metals and the currencies, and have some more thoughts as to supporting evidence for going up. So tune in. It will be posted here in a few minutes after this one. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.